Good afternoon, bon après-midi tout le monde. Welcome to this press conference with Commissioner Jonathan Hill. Today we will unveil our new proposals on public country-by-country reporting to bring about greater tax transparency when it comes to multinationals in Europe. We will start off with words of introduction by the Commissioner, then of course as usual take your questions. The press material both here and in Brussels, if that's where you are, is outside the press room and of course also available online, and we will have a technical briefing for you both here and in Brussels following this press conference. Monsieur le Commissaire, je vous donne la parole.
Thank you kindly. Well, I've just come down from the college where there has been very strong support for this proposal that we're making today to require all large multinationals operating in Europe to publish information on the tax they pay country by country. And as you know, it's been a big priority of the Commission to act against tax avoidance by the biggest companies, and I think we have already made a lot of progress. We've clamped down on state aid in the form of selective tax advantages. We've reached an agreement on the automatic exchange of tax rulings between member states. And only last month, we reached a deal to allow the automatic exchange of tax information received from large multinationals between the tax administrations. So against that background, the Panama Papers have not changed our agenda, but I think that they have strengthened our determination to make sure that that taxes are paid where profits are generated. So the proposal that we're unveiling today builds on the work that's been taken forward under the aegis of the OECD to require the sharing of information related to corporate income tax between tax authorities. This proposal goes a step further than that, and it will require those biggest multinationals to make that key information public. And while I think that we should be a bit careful about criticising companies if they're acting within the law, greater transparency will shine a light, and it can help us ask whether those are indeed the right laws. It can help the public see whether companies are acting in the best long-term interests of their shareholders from a reputational point of view. So in developing this proposal for greater tax transparency, we've been guided by a number of principles. First, that we should aim to be consistent with international work being taken forward by the OECD and endorsed by the G20. That we should build on the major reforms already taken forward by my colleague Pierre Moscovici to increase transparency and fight tax avoidance. That we should bring forward measures that will affect all the biggest multinationals operating in Europe, not just European businesses, and that we should be proportionate in what we do in two main respects. First, that we shouldn't undermine the position of European businesses vis-à-vis their global competitors, and second, that we shouldn't burden small and medium-sized European businesses which are typically only operating in one country. And indeed, for me, it's that wish to protect the competitive position of SMEs which is an important part of this proposal. It should not be the case that smaller companies, which are not able to shift their profits or they cannot afford clever tax advice to minimize their bills, it's not right that they should be at a competitive disadvantage to big multinationals. So I say this as someone who is unashamedly pro-business and unashamedly pro-competition, but I'd prefer businesses to be concentrating on their customers, on service, on product innovation, on true competition, rather than on the competition of the creativity of their tax advisors. So what's in this proposal? Well, it would require larger multinationals, those with annual global revenues above 750 million euros, that's in line with the OECD approach, to publish information publicly in 7 key areas. This definition will cover about 6,500 businesses and 90% of multinational business revenues. And on a country-by-country basis, it'll mean that those companies would need to publish the nature of their activities, how many staff they have, their net turnover, their profit before tax, the amount of tax due based on yearly profits, the amount of tax they actually paid in that same year, and their accumulated earnings. Now, this is information which is already collated and provided to national tax administrations. Multinationals, though, will also be required, as well as this country-by-country reporting within the EU, to report on the total tax they pay outside the EU. And we've also decided that if they are paying taxes outside the EU, in countries, in jurisdictions that don't abide by international good governance standards on tax, that multinationals would have to publish the same detailed information as for a European country. So if large multinationals active in Europe are paying tax in somewhere like Panama, to take one example, they'd need to make that public. Taken together, this information will give a clear idea of whether a large multinational is paying tax where it makes its profits. It'll be made available for 5 years on the company's website, and anyone who's interested could see where multinationals are paying their tax and whether there is indeed a level playing field for smaller businesses. To make sure that European companies are not disadvantaged, these rules, as I said, would apply to the subsidiaries of non-European multinationals doing business in Europe, as well as large European multinationals. European banks, as many of you will know, already have a specific transparency regime in the Capital Requirements Directive. That will not be affected by today's proposal. The only change here will be that large banks established outside the EU but doing business inside it will now in future be required to publish a country-by-country report. So in drawing up this proposal, we've consulted very widely. We've listened to views from all the interested parties. We fed them into our analysis. We've made a proposal on the back of that which builds on the OECD's work. I think as a result of this, we have a proposal which is simple and proportionate and will help us increase accountability. The next step is for us to work closely with Member States and the European Parliament so that we can make quick progress. We need to seize this opportunity to have a more informed debate about where companies pay tax in order to promote fairer competition between companies regardless of their size, and I think to build trust in Europe's businesses and build trust in Europe's tax system. Thank you.
Un grand merci, commissaire. Nous passons.
Thank you very much indeed, Commissioner. I'd like to open the floor for questions. Please introduce yourself before you ask your question and tell me which media you work for. For those who arrived a little bit late, there is all the press information down at the front of the room. It's also available in Brussels. I see a lot of people asking for the floor.